G'day everyone, welcome back to Pete's Investing. Today is March 3rd, 2023. This is the S&P 500 update. We did draw this key support line on our last update here on this vertical line, as well as this ascending diagonal trend line. Now, you'll notice if you zoom out a bit, you'll notice this diagonal ascending and descending trend line, and the price may well bounce in that area and consolidate for some time. It did bounce off quite nicely off this key support line we drew. So that was something we predicted, and it turned out that way. In terms of where it may go, I've drawn this Fibonacci retracement between that high and that low within that range. And I'll just adjust that because it did actually fall a bit below that descending trend line. Eventually when it changes, and we're going to change it to very slow. There you go. So it's actually come and touched the 23% level, and it may go higher to as far as the 50% retracement level. We're not predicting that's going to be a target, but that's just a potential probability based on Fibonacci retracement. But just be mindful, the daily CCI is still in a pretty strong downtrend. Likewise, the 4-hour is broken down through the moving average, which is another bearish signal, and on the hourly chart you'll notice it's in a pretty strong downtrend as well. Now if it does start bouncing up in between these two descending and ascending trend lines, then you may see the CCI break above its moving average temporarily. But just be mindful, it's in a pretty strong bearish momentum to the downside on both the daily and the 4-hourly. So just be mindful of going long anytime soon. To understand how to properly trade using the average down approach, reference a playlist at the end of the video, some links in the description below.
Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. The reason for that is blue chip stocks have generally got a good history and a good track record, and you want to avoid going speculative because you're not sure where that stock, especially if it hasn't got any history, you want to avoid making just guesses or gambling on potential trades. Buy stocks which pay dividends. The reason for that is if the price goes against you and you're not closing out according to gaining a profit in the short term, at least you're getting some level of income via dividends if the stock price goes against you. Don't short positions, go long only. So again, similar to the blue chip environment, if you're going to go short, you're basically speculating, and if you are going short and if you have to pay dividends, the dividends will be paid to those traders that are going long. So that'll be just an extra cost in your trade. And don't trade on news. Price is already factored in the share price. If all the insiders have generally benefited from any inside knowledge of the news, and so by the time it hits the websites or the papers, you're getting late on the bus, so you're going to be missing out on any potential gains. Thanks for watching. Don't forget to click the subscribe and the like button and click the notification bell to get all the updates to the channel. If you want to support the channel, subscribe to the Patreon page. The link is in the description below. Happy investing, and speak to you in the next video.